Good evening, ladies and gentlemen. Welcome back for another episode of the Busa Secret Show. So, thank you everyone for being here. Today, we have the privilege to invite one of the very famous stock in the oil and gas sector, this company called T7 GLOBAL. As we all know, now currently, we are in the recovery play. So if you look at counters that are like in the tourism industry, hospitality, oil and gas, even properties and constructions, they are all going up very high recently. So if you want to find out what are the potential companies to invest, well, this is your opportunity to learn about one very interesting company that specialize in servicing and providing, additional support to all these oil and gas company. So it's sort of like they're selling the gold digging shovel, right? In the gold rush. And today's sharing is done in collaboration together with Stockbit as well. So I would like to invite Rondi to come and share a few words before he passed the floor over to Mr. Tan Kay Vin, who is an ED of T7GLOBAL, who is with us. So type in hi, right, at the comment. Rondi, I pass the floor to you. Hey, Rondi is a bit stuck now. Okay, no worries, right? I think Rondi's line is not as good. So we wait for him for a while, but type in hello if you can hear me. Yeah, so we have Rashidi say, hi Mingtek, right? Good evening all. Good evening, Suhairi, Trevor, Hisham, Catherine. How many of you want to find out about, oil and gas company? Type in oil, O-I-L. Type in O-I-L if you are excited to learn about this company. And thank you for tuning in so early. We have 170 packs now. So Rondi, are you ready? And this line is still a bit looking at his expression. Rondi, are you ready?
Yes, I think my internet might be a bit for.
Can't really hear you. Okay, it's okay. I think I will just pass the floor to Mr. Tan Kay Vin later. Just to share with you, Stockbit is actually a platform where you can go and discuss stock. I believe there's already existing some discussion about T7GLOBAL. So if you are keen, you want to go and find out more information about T7GLOBAL and what other investors think, you can actually go to Stockbit website and find out more about it. But let me pass the floor to the ED of T7GLOBAL, Mr. Tan Kay Vin. Hi, Mr. Tan.
Hi, evening, Mangtek.
Yep.
Thank you for having us today. Yeah, so should I present now? Or?
Yeah.
Okay, sorry. All right. Okay, everyone, Mangtek, can you see the screen?
Yes, I can see the screen.
Okay. So good evening, everyone. My name is Kevin, ED of T7GLOBAL. So thank you for having us today, Rondi and Mangtek. So let me bring you a bit about what is T7 all about. We started our business in 1990. This makes us a 30 years old oil and gas company. We are a Malaysian-based international oil and gas service provider, mainly known for our maintenance services within the industry. Many of you might better know us as Tanjung Offshore Berhad. But however, we have been through a rebranding exercise in 2016. So now our group is called T7GLOBAL Berhad. So our current order book stands at 1.7 billion. Our revenue mainly supported by long-term supply and maintenance service contract. And since our rebranding exercise, we have also introduced two new industry to the group, mainly aerospace and construction, which I will share with you in details. T7GLOBAL Business Division can be divided into three divisions: the energy, aerospace, and construction division. So energy sector, we are involved in oil and gas, general industry, and also the marine technology. For aerospace, mainly in two sectors where we are involved in the manufacturing sector of the aerospace, where we specialize in metal surface treatment. And then of security technology, where we represent a few international OEMs to market their drone technology products in Malaysia and also in the region. So lastly is our construction, where we focus on infrastructure construction, where we are able to build buildings, infrastructures, road, bridges, and etc. So let me dive deeper into our energy sector. As you can see, T7 is involved across all the oil and gas value chain, mainly upstream, midstream, and also the downstream. Upstream is more on the exploration and development of the oil field. Midstream is more on the transportation, and downstream is mainly all the refinery process and on the marketing and distribution of the oil. So originally T7, we are started off as upstream services, provide upstream services where we focus on contracts such as EPCIC, O&M, operation and maintenance, and also wells and decommissioning. So throughout the years, we have also developed and also acquired companies and also services where we are able to provide our engineering solutions to the midstream and also the downstream, where we have company subsidiaries such as Venmax and Gastech, where we are able to provide items, equipment such as gas compressor, valve, pumps, and etc. So last but not least is our manpower recruitment, where we joint venture with a UK company, Furcroft, where we are able to supply engineers, manpowers to all the oil majors in the country. So we are talking about people like Shell, Petronas, Repsol, and etc. We are supplying our manpower to them. Secondly, I would like to highlight a new contract where we just secured earlier this year in February. It's Bayan MOPU. So MOPU stands for Mobile Offshore Production Unit. This is engineering design of the MOPU we have. So this is a 10 years contract by Petronas Carigali. Actually, Petronas has engaged us to construct this mobile offshore platform, and then they will lease to us for the next 10 years. So what is the purpose of this platform? Maybe I can explain to you. The Bayan field is a gas field in Sarawak, Bintulu, Sarawak. Currently, there are 8 different other platforms there, and mainly producing gas. Currently, the field are able to compress up to 40 million standard cubic feet per day of gas. So with the recent new discovery by Petronas, they require more capacity on this gas compressor, which is where Petronas have engaged us to construct and also operate a MOPU there, where we have successfully we increased the capacity of the field to 160 million standard cubic feet per day. So our capacity, as shown on the slide, is about 120 million. So next is our aerospace division, where we are mainly involved in the manufacturing sector. So what is the metal surface treatment? Metal surface treatment initially is the final step in the manufacturing sector of the aerospace area. So before a part is being assembled into a larger parts like engines or wings, or being classified as flying parts, they will need to go through some sort of treatment to enhance or change their characteristic, so they are able to stand through the harsh weathers when they are flying on the sky. So essentially, this is a very important step, and many certifications and licenses are required before we are able to touch the flying parts. So we started this diversification in 2016. We then joint venture with Qgo Aerospace Group. They are 50 years old UK company, aerospace company, who have presence in UK and also in Mexico, and also now in Asia with us, T7. This facility is certified by NADCAP and AS9100, which is the minimum requirement for us to process the aerospace parts. we started groundbreaking of this facility in 2018. We completed within a year, and for the whole 2019 we spent on we get our license ready, we get training, we even send some of our key employees to Mexico for training. We then started operation then. So next is the construction sector, where we is also part of our rebranding exercise, where we've also introduced the new division, construction, to us. Why the group? The rationale of us setting up a construction group, because as our group expand further, there are a lot of construction requirement. So we have started to build our own facilities, fabrication yards, our aerospace facilities. With that, we have also gotten some success in the infrastructure sector, where we have won jobs for the past 2 years for the MRT, LRT, so which then give us the confidence to go even further. So currently, we are also bidding on some of the JKR contracts and the government infrastructure contracts. Not to say the highlight, in 2017, we also partner with China State Construction Engineering, Third Engineering Bureau. They are one of the largest construction players in the world. So we have joint venture with a 5149, namely T7 China Construction, Third Engineering Sdn Bhd, to tap into each other's expertise and resources. The target is to target larger scale infrastructure jobs in Malaysia and also in the region. Next, I would like to highlight on our financial performance. As you can see, since our 2015, we did a kitchen sinking exercise where we impair a lot of our losses, and then since our rebranding exercise in 2016, we have maintained a stable growth of 31% 5-year CAGR. Of course, no doubt we did face a little bit of impact for this year. As you can see, third quarter we are only able to from 123 million. But however, I would like to highlight we are proud to say we are one of the few oil and gas counter that still profit this year. So we foresee after this, with our MOPU contract, with our T7 Max acquisition, we will be able to go back to our 2019 level next year, and also even further. Next, financial position. A few things I would like to highlight. As you can see, we have over the years we have stable increase of our total equity from 130 million to 210. Overall, we have also, because of the mobile offshore contract, we have also incurred some debt. But however, would like to highlight we are ever ready to take on more. We are in a situation we can take more of these MOPU contracts. The last but not least is the business updates, key business updates. What have we done this year? I would like to highlight in overall, we have gotten 6 large contracts over this year into 2020, namely Repsol, Petronas in February, May, and then also our construction arm also successfully secured a small contract from East Coast Economic Region Development Council, where we assist the Fishery Department of Malaysia to build a fish processing park in Endau, Johor. And also the recent complete acquisition of T7 Max, and also the approval for the 20% private placement exercise. In the aerospace business, no doubt it is a big hit for COVID this year. A lot of our contracts that our factory have secured previously was either put on hold or the batch number was reduced. But however, we never stopped there. Our team this year went on to explore other industry. such as the automotive, electronics, and also the semiconductors industry. We are also able to service those industry because essentially the treatment process is the same. In fact, in aerospace, it might be slightly more stringent. There are more process we have to put in place to make sure we are obliged to the aerospace conditions. But so for us to take on the other industries, it's a no problem for us. So in fact, this year we also went on to service some automotive and also electronic parts in the facility as well. Our MOPU contract, this is a 10 years contract I highlighted before with leasing, and we will operate for Petronas for the next 10 years, operate and maintain. So we would like to highlight this is not something new to us. We have gotten it before, and this is our second MOPU contract, and we are positive that we will in the future go for more MOPU and FPSO kind of contracts. Last but not least is the new services that our group have developed. It's called the subsea services. We are proud to say we are the first company in Malaysia to have introduced the mini ROV, remote operated vehicle, to Petronas, where we are able to save the cost of this kind of job for up to 50%. So futures with this, I believe Petronas will go ahead and launch more of this kind of inspection services as because of the cost savings that we have provided. So that should basically take us to our end of our business update. So maybe I pass the floor back to you, Meng Tek and Rondi.
Sure. Thanks, Kevin.
Okay, thank you for the sharing. I'm sure, from the floor, there's many questions because most of the things you say, layman may not be familiar with. But maybe, Rondi, do you have anything to say about the presentation just now? And then any follow-up question from you?
No, I think I'll leave the first question to you, Meng Tek. But maybe, just an icebreaker, Kevin, right?
Sure.
Just an icebreaker. I think a lot of the audience and a lot of the investment community, they don't really understand, or rather they are not very clear in terms of the oil and gas supply chain and the different streams of oil and gas. So maybe you can highlight to us which of the oil and gas stream are you in, and who are your closest peers and who are your closest competitors, and who are you not, and who are you similar to?
Sure. Okay. Across the oil and gas value chain, we have I think the easiest is to divide into three sectors. So the upstream and the midstream and the downstream. So upstream is where the companies, the oil production exploration companies, we call it the E&P, exploration and production companies. So these are companies like Petronas, Shell, Hibiscus. They actually explore the oil and produce it out. So we have, and then we move on to the midstream. Midstream is mainly for the transportation. So we have transportation of the commodities from the platforms or from the sea to the refinery. So before the oil are being able to consume in the general market, public market, they have to be refined. So from the midstream, they will transfer all the commodities to downstream, where there are all the refineries to refine all the oil before they are distributed to across all the various companies for their users. So essentially, T7 Global, as I said before, we can service across all range. We started our business in the upstream, where we do a lot of maintenance services, operation maintenance for the oil majors, and then we move on. We have also the trading and services, and also the engineering services division, where we are able to service across the midstream and also the downstream as well. Yeah. So essentially, and then last but not least is our manpower. We also provide manpower across all upstream, midstream, and downstream whenever it's required lah. Actually, yeah.
Okay, but you would actually say your peers would be the likes of.
Oh yeah, my peers. Yeah, sorry, my peers will be the likes like Utma, Charimin, Petra Energy. Yeah, these kind of companies. Yeah.
Okay. All right. Thank you. Let's move on to the first question.
Yeah. So I think I'll go directly into the financial, because we all want to know about whether your company can make more money year after year. That seems to be the mantra, golden rule. Only invest in a company that can make more money next year than this year. So just to ask you, we see that your financial quarterly result, this year in the first 9 months has been affected quite badly, and dropped a lot year on year. What was the reason? Because number one, we see that you're actually servicing company, right? So even if the oil price drop, you have the contract, you should be just servicing them. So you should still have the revenue and profit. Then also we see that you have secured so many contracts that is worth quite a lot from Q4 2019 to until now. Keep on announced contracts, but then the revenue and profit is not showing yet. Where do you think is the gap? Maybe you can share some light, or all this revenue has been deferred, so it may show up in the coming quarter. Is it?
So of course, at the start of the year when COVID hit us, MCO we had impact us a bit lah. So we had to implement a lot of new SOP procedures. In fact, also our client, one of our main client, Petronas, also wanted to see a lot of our procedure change. So it took us a few months, and then after that, everything goes back to normal. We start taking shift and all this kind of SOP. So we are able to continue to work. So that's why we start to see the catch up on the revenue. But however, a lot of the billings are not able to be done this year. So we foresee next quarter or even next year the billings will be done. So actually a lot of work has been done. Just the billing side is not completed yet. Yeah.
Okay. Yeah. So so the work has been ongoing throughout this period, just that you haven't built them. Am I correct?
Yes.
So can we expect like all these things to suddenly show up in the next quarter, next 2-3 quarters?
Yeah, I think the fourth quarter, the fourth quarter we start to see some improvement. Actually, if you see our quarter to quarter trend also, usually the third and fourth quarter is where we start recognize most of our revenue for the year as well. So this is usually a trend for us. So we foresee the similar trend. No doubt there is a minor impact this year, but we foresee the catch up is there already.
Okay, so another question from me. Rondi, you want to ask the next question?
No, I think I just want to, Kevin, I just want to grasp a little bit, because earlier on in the presentation, you mentioned that you have an order book of about 1.7 billion, right?
Yeah.
Can you maybe help us to, break down a little bit? This 1.7 is going to be in your tank for over how many years? And, how much can we expect it to be realized into your revenue in the next how many years? Like 1.7, is it going to be 500 million per year, or how does it go?
So actually our 1.7 billion can last us for 9 to 10 years. The 10 years of course come from the 10 years MOPU contract we secured. But generally our usual maintenance contract are 3 to 5 years. So if you see most of our, I think slightly more than half of that should come from the MOPU side, and then a lot of it will come. So let's say if we will break down, we have our trading and services division, maybe where max side we have about 400 million. That then we have our mainly of our maintenance services side will take about 500 million. So the rest remaining will come from the MOPU over the 10 years. I think that's quite a good breakdown of my order book. Yeah.
Okay, understand. Clear.
So if we want to break it down, just basic calculation, 1.7 billion over 10 years, 170 million a year is a good minimum. Yeah.
Okay, thank you.
Of course, it's not like that, but if you want to basic calculation, it should be around there.
Understand.
But that is not the only contract you have, right? That is just one of the many contracts, or is a total order book?
No, the order book is 1.7, right? We have the total is 1.7.
All right. Yeah. So I guess I'll move on to the next question, which is regarding, you just start the new aerospace division, right?
Yes.
So this aerospace division, clearly we know that because of all these COVID and all these things, how would it be impacting your business in the aerospace industry, especially as all these companies are now putting their plane on hold, leaving them on hangar, right? So are you still able to get job in this industry? If not, what is your way to mitigate and to diversify away from this industry?
Yes, it is very unfortunate. In terms of aerospace industry, of course, it never stopped for us actually. This year, we still do a lot of audits by our clients. So these are the aerospace clients as well. We start to see a lot of trend where in the US and Europe, where a lot of the mid-tier suppliers, those that don't have a good cash management, they're starting to close down. So a lot of the OEMs are actually looking for an alternative. So being Asia, one of the low-cost region, definitely this is the area they are looking at, the current area. So the procurement team have been in touch with us the whole year. We have been doing virtual audits with a couple of international OEMs, and they are ready to pass on the job if we pass through these audits. If COVID, if travel is good, is okay, which we will foresee all the vaccine coming up. We know that travel will come back. So once those come back, the jobs will come back, right? And then, of course, we are not only waiting for the vaccine, right? We are also diversifying our clients. So we are targeting the automotive guys, we are targeting the electronics and also the semiconductors. Right. So there are the opportunities there as well. So with our capability of able to serve the aerospace division, I think aerospace industry, I think to serve the other industry is no problem as well, because essentially the process are quite similar. So we do not just purely rely on aero. So we also look into other industry as well.
Thank you. Yeah. So yeah, Rashidi is asking a question about MOPU, and I think there's a few questions coming up about MOPU. Wow, you guys are quite alert. I guess I'll pass this question to Rondi to ask. So Rondi, over to you.
Okay. I'm seeing a lot of questions about MOPU, and I think that is something that I'm very interested as well. I believe that is a big chunk of your revenue in the future. Again, as you mentioned, half of your order book is actually based in the MOPU, right? So perhaps on this question, I'll just try and cramp it up all together. There will be probably about 5 questions if you don't mind, Kevin.
Sure,
okay.
Sure.
Yeah. So maybe, on MOPU, can you share a little bit with us more about more information about this mobile offshore production unit? Is this, how is it different than FPSO that is being done by Armada and Yinsen, right? That's number one. And when will when will the second MOPU start? That's question number 2. How long does it take to set up? How much is the capex that is going to be incurred by the company, and over how many years? And how is T7 Global plan to finance this massive capital expenditure? And again, I guess you already answered this question just now. The estimated revenue going to earn by the company over the awarded 10-year period, I believe that would be 800 million divided by 10, which is 80 million per year. Yeah, I think that's all for the MOPU.
Okay, so MOPU. First of all, MOPU. What's the difference between FPSO and the MOPU? Essentially, the name says it. Mobile offshore. MOPU, they are able to move, whereas FPSO generally they are bigger and they are just stationed there. So generally the MOPU are more flexible. They are able to move around the field and do the works. So this MOPU contract, it started. It will take us 2 years to build. So we have started to construct this year. So at the end of 2022, second half of 22, we will start operation of the MOPU. So in terms of capex, we are able to. In terms of capex, we are spending about almost 300 million for this. We have a combination of debt and equity for this. With the local banks, they have approved our loan as well. Yeah. I hope I didn't miss anything.
No, I think you didn't miss anything. Okay, so perhaps a follow-up question with regards to the capex and how you're going to finance it, especially with the debt. Because if I'm looking here at your total debt position of T7 Global, right? Just comparing it between right now and how it ended last year in 2019. Your total debt actually had increased by almost 100%. It grew from about 40 million to now about 80 million, especially on the short-term debt, which increased substantially. So is this all question number 1 is this all due to the capex for the MOPU? And on second question, do you guys, like as a company, do you have like a cap of your gearing ratio? Let's say like it's not going to exceed 100% of the equity or something like that, or should all of us anticipate a sharp increase of your gearing going forward?
Okay. First of all, we T7 we have no cap, no gearing cap. We are comfortable with the gearing level currently. So why I say that, because this is a project-based financing, right? So the moment we finish construction, we will have a steady, secure cash flow, which will be able to repay our debt on time, and of course our earnings as well. So yeah.
Okay.
Yeah, we're able to.
And basically the the short-term debt increment, it's
the short-term debt, yes, is the debt we have incurred this year is purely on the MOPU, because a lot of short-term we started to engage some of our suppliers and construction to start construct the MOPU. Yeah.
Okay.
So the larger one will come in next year. The larger portion of the capex, we will fund it. Yeah.
Okay. And do you foresee any working capital issue? Because you really need to churn a lot of cash, and I believe a lot of your clients, especially in the oil and gas industry, they might also face some sort of like working capital constraint, right? Or are they all paying you normal, like in normal circumstances right now?
Of course, there are some some delay in some payments, but we are confident we are still in the comfortable cash level to proceed with this project. We also have placement, 20% placement approved, which we plan to do early next year, and also our bank facilities are ready, intact, to go. Yeah.
Okay, thanks, Kevin.
Yeah. Okay, thank you. So my question will be about oil price. How does oil price affect your company? Because as I see, you are doing servicing, right? So whether your client, I mean, this is bad to say, but whether your client make money or make very little money, none of your business. As long as they are still doing the business, they need your service, right? So seeing the oil price going down a lot, then suddenly coming up, then some of them like reducing their capex. How would that affect your company? Is there going to be any positive surprise or downturn coming soon?
Of course, in layman terms, if the oil companies have more activities, we will have more activities as well. But I would like to highlight is that all our contracts are mainly long term, 3 to 5 years. They are locked in place. So whether the field is operated or not, certain maintenance will still need to be there. Of course, if you're driving a car, the more you drive, the more you need to maintain. Same kind of concept. So essentially, our business won't stop, especially as long as we have all the long-term contract in place. So, and also if we look at all this, our strategy recently is nowadays is to focus only on brownfield projects, because we know that the oil price is a very volatility. So a lot of the players will mainly work on the brownfield rather than the greenfield projects. Yeah. So that's our strategy. We target the brownfield projects, and also we also do a lot of well decommissioning, right? Where there's a lot of platforms in Petronas they have to be decommissioned. So we also successfully decommissioned some for Petronas last year. So moving forward, we will do more of those jobs as well.
Mind sharing what is the difference between greenfield and brownfield?
Okay. Sorry. Greenfield is a new field, so it has never been explored before. So brownfield is essentially a field that you have explored before. Maybe another oil company was there, and then maybe it wasn't lucrative enough for them, so they move on to the next oil field, and another player will come and take over. This maybe more lucrative for them. Yeah. So that is essentially what the brownfield and greenfield is.
All right. So I guess the final question from me would be, I saw that you are planning to do equity raising, right? Because you need to use a lot of investment capex to grow your business. Can you share what is the specific use of this 46.3 million to 52.6 million ringgit raise at 45 cents that will be used, right? What is this equity raising? Because it's quite significant. It's about 20% of your company share.
Correct. Yeah. So mainly the placement, almost 60%, more than half will be used on the MOPU. Right. The remaining will be used on our other maintenance contracts, such as from Charigale Has, from PTS Resources, and also Repsol. So the expansion of those contracts. Yeah. Of course, we also understand with placement, we know that there will be a lot of dilution in the EPS, but generally we are confident that we will increase the EPS once all our earnings, especially MOPU, will go on. We will also increase all the earnings per share as well for our counter.
What do you think? What kind of return are you looking at? Internal return, IRR, your internal rate of return for this project. Would you mind sharing what is
You mean for the MOPU contract or?
yeah,
Yes.
return on the asset?
Double digit margin.
Double
I
digit.
think we yeah, I can, that's the most I can disclose. We will have a double digit margin.
Okay. Yeah. So over to you, Randy.
Okay. I think there are a few questions here, Kevin. When they ask you about any intention to pay dividend and all that. But I think something that perhaps is quite interesting as well. Do you know, Kevin? I was doing this analysis on my own. But do you know that T7 Global is one of the top 25 companies in Malaysia that bought back their shares?
Top
You guys
25.
Yeah, top 25. Like out of all the companies in Malaysia that buys back their shares as a percentage of their shares outstanding, T7 Global is one of the top 25. You guys, this year, you guys have spent about 2.6 million ringgit to buy back about 1.6% of your total outstanding shares. Yeah. So I guess, just in relation to that question, do you guys plan to do any sort of like dividend? Do you guys have any dividend policy going forward? And perhaps why do you prefer doing a buyback instead of, say, paying out a dividend?
Actually, simple way to put this, we are quite confident on our business. Also, we do have plans. As you know, I think last year we paid off we paid one round of dividend. So with the success of those contracts like MOPU, we foresee in the future round we might have something like dividend policy in place, right? Especially when our MOPU kick into place. So we know that, yeah.
Okay. Just for everybody's information, right? T7 Global bought a lot of shares at an average price of about 30 cents. So I would believe that you guys think that at 30 cents, it is definitely undervalued. Okay. I think I would like to ask the question on this, your recent acquisition of T7 Max, right? Because I believe T7 Max is going to be one of the key factor of improving your bottom line going forward, Kevin. When I'm reading about this T7 Max and all that, I saw that, just last year in itself, T7 Max have a profit after tax of about 10 million, while T7 Group was only having a profit after tax of about 7.7 million. And going into this year, they are actually having a profit of roughly around, 6.5 million, which is actually higher than previous year 6 months, right? So 6 months of 2020 for T7 Max is higher than 6 months of 2019 of T7 Max last year. And last year, or rather up to this November, you guys had only 51% of equity of T7 Max, right? And as of recently, you guys took over the entire 100% at a PE ratio of about 7x, which, I believe that is a pretty good earnings multiple for a T7 Max. So, so perhaps the main question I would like to ask is perhaps you can just tell us a little bit more about T7 Max. What is the core business of T7 Max? What are the latest ongoing projects and the order book value? And more importantly, I believe, is can you guide us what may be the profit contribution to us once you have 100% of T7 Max going forward?
Okay. T7 Max is a trading and services company. So actually, it started its business in 1999. So they started to trade all the oil and gas equipments. So over the years they've various agency that works exclusively just with them. So these are brands such as Siemens, Yokohama, Oliver Valves, just to name a few. So what do they sell? They sell like industrial equipments like valves, pumps, compressor, gauges, marine hoses, etc. Actually, the whatever you need to in the oil and gas industry, we do have, and we can provide. So why T7 WAMX doing so well? Because we have almost 17 active and ongoing projects currently, and most of them are exclusive long-term price agreement. So whenever the client needs this equipment, they will call on us to replace or to repair. That essentially is what we do. We work for clients such as Repsol, Murphy, Shell, and of course Petronas as well. As of October 2020, our order book stands at 387 million. And this will last us for the next 4 years. So the key of this is that we have exclusive agents with this kind of with these products and long-term price agreements with our clients. That's why we are confident. Also we in a way just now we got this. We have completed the acquisition with a PE of 7.7 times. So we believe it's a pretty good deal with us. We will pay back the owner in the 24 months installment with no interest expense. So why we do this? Because we believe there will be a huge synergy between WAMX and also our maintenance group. So with this WAMX fully acquired by us, not only our earnings will hugely increase, our group, our capability are also able to improve our services to our clients.
Okay. And would you have any guidance in terms of margin for this, T7 WAMX on the order book and top line and bottom line?
We will definitely make a double-digit margin. As you can see, we've been making a double-digit margin for the past, since we bought them. so they will continue to make that kind of profit we foresee. Yeah.
Okay.
Yep. So
do you have any more questions?
Yeah. That's all from my side. I think I'm pretty clear about what the company does, and seems like next year there may be a lot of things that we can look forward to. But when do you foresee that the revenue to kick in from this MOPU project? Will it take a long time? And initially, would there be huge depreciation before we start to see earnings?
Actually, no. As I say, we started to incur some of the small expenses this year already. Next year will be the huge larger chunk but we don't foresee a huge depreciation. The construction will take us 2 years, but next year we will also be able to claim some kind of money from our client for mobilization, the first cut, and things like that. So all this will be able to claim some kind of payment from them. So it won't be such a big move in our financial statement. So in terms of where our numbers will recognize, we will start depreciate after 2 years when the asset is ready. So at the second half of 2022 is where we will start recognizing the revenue and also start depreciation of the asset.
Okay. I just want to get a picture of when can we see huge profit from your company. So probably 2022.
2022 is where we can see more than 50% increase. Yeah, we foresee more than 50% increase after that.
Yeah, and including WAMX, all these things, right? And then the consolidation.
That one.
You mean financial year or the year? Because financial year can be different. You mean you're talking about the year 2022 or financial year 2022?
halfway. So half the impact we will start to see in 2022, because we start to operate into 2022 second half. So we will start all the daily charter rate, everything will kick in.
I see. Interesting. Yeah. So this one last question from me. If Rondi, no more question from you, right?
I got a few more questions, I think.
Okay. One last question from me again is what will be the worst case scenario for T7 Global? Like, what would be like your worst nightmare that will really make your business go down, or what? What's the biggest risk that you can think of?
I guess the biggest risk is if the
Oil
world
price go down?
stop using oil and gas, the world stop using petrol.
Could it be possible? I don't know. Right? With people using electric car now, right?
Yes, maybe, but not in the short term, right? Actually, to share with you, we've also, our group has also started to look into renewable energy. So of course, we will disclose that when the time is right, lah. Right? These are some of the moves we are moving into also, but we don't foresee much so-called what biggest risk. You know, if Petronas closed down, if I don't know, if COVID got out of control, maybe that should be our biggest risk, maybe.
Yeah, but a huge chunk of your client are also involved in natural gas, and you're servicing that as well, right? So even if oil price down, natural gas one should diversify.
Yeah. Yes. Of course. Yes.
Randy, back to you.
Okay. Maybe for me, I think I just have two more questions from the floor, and I'll just sum it up with my last question. Okay, so the first question from the floor is on your tender, right? Because I believe you put up a lot of tender on an annual basis. Is there like a percentage, historically speaking, or maybe like your internal KPI on how much contracts that you guys wish to win per tender in an annual basis? And I guess the question also comes up with what differentiates yourself against all the other people that goes within the same tender? So maybe that's the first question first.
Okay. Our tender book is currently 3 billion, just to share with you. Generally, we set a 30% success rate for our group, and we are achieving it so far. So what differentiates us between all the other oil and gas players? I feel because we have innovative solutions. We introduced innovative solutions. One of the example like MOPU. In fact, many years ago, the first MOPU, we introduced MOPU to the market as well. This one, the subsea services, we've set up the subsea services where we introduce mini remote operated drone to do all the inspection services, to change from all the manual divers, and it saved 50% savings for our client. So things of innovative solutions like this, and also all the different smart partnerships that we have secured. We have joint ventures such as the aerospace partner Hugo, the manpower business where we joint venture with the Furcroft UK business, and also the China company. So with smart partnership, we tap into each other resources. We also introducing new innovative solution. This we believe we will continue to strive and also stay on top.
Okay, so the last question from the floor for me is with regards to your aero division. I think just now you answered Ming Tek's question in a sense that your aero division on your Kilgore is very flexible in a sense that you can move from from aerospace to automotive to semiconductor and so on and so forth, right? It's very flexible. And that sort of like reminds me of another company in Bursa, which is SAM Engineering, which is doing the same thing. But are you seeing, you know, because we on a daily basis now, we are reading newspaper about the recovery play, about how Boeing and Airbus are coming back with orders and they are really chasing orders, right? Are you seeing that flow on T7GLOBAL on your side? And, you know, after kind of like diversifying or moving away from aerospace into some other things and new ventures, do you actually see that it is good to stick to aerospace going forward?
SAM Engineering, yes. Actually, SAM Engineering potentially one of my clients as well. So
Okay.
we don't do the same thing, but part of my capabilities they can do as well. So essentially, we are only focusing on metal surface treatment. So we still need the machinists. So SAM Engineering also huge chunk of the business they do machining. So we partner with a lot of we work for a lot of machining companies in the country or in the region. So the moment they finish produce the metal parts, they will send to our facility to treat before they're sent back to the client, right? We are start to see, like I mentioned just now, we start to see a lot of all the audits. All the audits are still ongoing. In fact, more and more companies are exploring companies in this region. They know, everyone knows the aerospace industry will come back, and everyone is getting ready. Everyone's getting ready. So with us, we are, with us being the one of the largest metal surface treatment company in the country, we foresee with the recovery of the airplanes, we will be able to catch a lot of those.
Okay. Thanks for that. Okay, I think Kevin, we are almost 1 hour in. Perhaps we just okay. There's one last question from the floor. It's basically asking, what is the latest view adopted by Petronas and other oil majors like Shell, BP on oil prices? I think this might be important because T7 must roll out their projects to sustain business. Do you have do you know what a lot of economists' views are like in terms of oil prices going forward, or rather, what is your in-house view on oil prices?
So actually, we foresee the oil price will be volatile, and it will remain within the 50s, 60s level. I think those days where the oil price goes back to the 100 are no more. So with all the other new energies, renewable energies ongoing, I think even internally, I can't speak for the others, but internally we feel the oil price will maintain around this level for the time being.
Okay. Okay, so I think just one last question from me, Kevin. After that, I'll let you go.
No problem.
It's getting late, right? Okay, so one last question. I think this is a question that I often ask. Oh, am I hanging?
It's fine now. We can hear you now.
I can hear you.
Okay, yeah, sorry. So the last question is, one of the things that a lot of people try and look into their investment is, you know, what is the greatest asset and liability, right? And sometimes the greatest asset and liabilities is never in the balance sheet, but it's actually in the boardroom. It's leadership, right? So, Kevin, I know that you are relatively new in T7GLOBAL, but I understand that the company has gone up. I mean, the company has gone through many ups and downs. Just now you mentioned about some kitchen sinking exercises and all that. Can you just tell us a little bit more about, you know, the boardroom? Like, who are they? What are their leadership style, and what have they achieved over time? And on yourself, right? Are you more motivated now than ever? And what sort of things kind of like worries you?
Okay. So in terms of our boardroom, so first maybe I will go on and speak about our chairman, Dato Sri Nick, our chairman. He is a lawyer in background, so he came in the board 2014, if I'm not mistaken. So this was after the board tussle. So we in 2013 we did have a few board tussle where we had new shareholders came in, and then that's why in 2014 everything was settled. That's why we start to see the kitchen sinking, where when 2014 onwards we have new management, new board members led by Dato Sri Nick and also our deputy chairman Tan Sri Tan. So both of them they've changed the board, they've changed the top management, and also in fact introduced new businesses for the company. So the leadership style they encourage the leadership style they are very prudent, meaning they have a good balance. They're very prudent in terms of investment opportunities or in terms of business opportunities. We work closely, hand to hand, and we evaluate all the opportunities before we invest or proceed with. So a bit of background about Tan Sri Tan, our executive deputy chairman. He's 30 years in the oil and gas industry. He started off, and then with his leadership, he also introduced oil and gas services development in the company. Also bring in our board member. We have two executive. Two executive director, myself and Tan Sri Tan, and then we have Dato Sri Nick, Tan Sri Richard Ko, and we have ex Admiral Tan Sri Kamaru Zaman, and also ex police Dato Sri Wan Nashmuddin, and also Miss Tan is our audit chairman as well. So we have a pretty good range of board of directors. They have a different range of expertise, which they are able to contribute to us, coming from different sectors, different background as well. Yeah.
Okay. Thanks, Kevin.
Thanks, Kevin. I think that's about sum it up what your company is about and where your company is heading to. So I thank all of you for being here today, all the way to the end, all 200 something of you. And we hope all the best for Kevin, and we're looking forward to the recovery of the oil and gas industry, as well as seeing great results from your company, from the recent acquisition, as well as the rollout of your new project. All right. Keep in touch, everyone. Have a good evening. Bye-bye.
Sure. Thank you. Thank you.
Thank you, Kevin.
The conversation, you can go to Stockbit website. I'm sure the link is here. Yeah. You can go to Stockbit, this link tree. Then you can discuss on T7 Global. Maybe there will be some good sharing, technical analysis, fundamental analysis there. All right. Thank you, Kevin. Thank you, Randy.
Thank you. Bye.
Thank you, everyone. Thanks for tuning in.